Welcome to another episode of Prophecy Trade. Today's video, I will be breaking down gold. The pair is XAUUSD. Today's market, we actually had 5 opportunities for some scalping opportunities, and I'm going to break down each and every one of those trades and show you how I got in the market and how I exited the market. So, first things first, I'm going to show a brief overview. So we have a long here for about a 1 to 3 risk to reward. We have another long for about a 1 to 4.5, and then we have another short for the third trade, almost a 1 to 6, and then we have a scaling entry again for almost another 1 to 6, and then we also have a 1 to 7 for a long. So we actually, this is a rare day. We actually went 5 for 5 for the day. So today was a static day. So it's definitely worthy of a video to share with my fellow subscribers. So with that being said, let me dive right into it and break it down how it started. So first things first, I'm gonna go to another clean chart, and I started at the 6:30 open. So let me mark off my 6:30. 6:30 is roughly right around here. And then I traded to all the way to roughly around 10:30. So there's like a 4-hour window. That's where most of the volatility is in the market when trading gold. It's that London, New York session overlap. So my first trade actually was a long position at about 7:11. So let's find that 7:11. The entry was somewhere along this region, right around here. So I'm going to show you what I saw, and let me break that down for you. So first things first, we were on the 15-minute time frame, and I wanted to identify the higher time frame or the session bias. So we can see here there was price was printing, making lower lows and lower highs, and then we see a shift in market structure. This is that first market structure shift. We are no longer in a downtrend on this session. So we are now, instead of looking for shorts, we're now looking for a long space on this confirmation. Price then comes up and retraces, and we just start scanning the market around this 6:30 timestamp here, and you can see we're in a nice retracement, creating a higher low. So with that being said, we could have easily now, see it clearly when you're drawing your trend lines there. There's market structure being printed, higher highs and higher lows. So what I actually saw is I drew my fibs from here to here. From this swing low to this swing high, I noticed that we were in this 38.2 region, and the overall move for the session biases, my long-term projection would have been roughly at this minus 61.8 level. So with that being said, I dropped down to the 1-minute time frame. We're gonna go back to the 6:30 open from where we were, where we analyzed the market. So now we know that price is trending upwards. We have market structure shift. We have higher highs and higher lows. So for me, I'm looking for longs. So I see that price is descending. We have price continuing to make these lower lows and lower highs on the 1-minute time frame. We have price then decides to rally up, breaks above the 50 EMA, and then price comes up, and we finally see some nice relative area of respected candle here. So with that being said, I actually ended up drawing my trend line from somewhere here to here, acting as a form of a support, and once now support, previously was resistance. So my entry was actually based off of that. So again, another confirmation, we have the Fibonacci, and we also were at that 38.2. And then this is the bonus confirmation. I was looking for a fib trick as well. And if you look very closely, we actually just shy missed of that Fibonacci fib trick. So, but I had market structure on the higher time frame. I have the overall move, market structure shift. I have that potential trend line. I have a breakout of a counter trend line. I have price action, bullish engulfing, nice retracement, 38.2, candlestick analysis. There's a doji there, and then there's my entry potentially right around here. So 7-Eleven, I was risking roughly 25 to 30 pips, using a fixed stop loss rule, targeting that overall minus 61.8. So basically, letting this whole trade run, this was potentially a 1 to 6.5. I believe I took out a majority of my partials, my entire trade just before that. So there's that first trade there. And then we actually saw another opportunity at 7:32 a.m. And let's see here. So then we actually drew our trend line. From now we have price respected. Price respects once, the initial, twice, third time, and we're looking for that 732. Price comes down and respects just along here. We enter based off this price action candle here. So we have a higher time frame confirmation, we have the trend, higher time frame market structure, we have the overall move, we have a trend line, we have market structure on the 1 minute, we have the breakout of this descending trend line acting as a counter trend line retest, showing it's bullish engulfing. We have high volume, a lot of imbalance as well. So basically we entered right around the 732 mark off the respect off the trend line, and price taking price somewhere up to this region. So we could have done this in a number of ways. You could have drew it from this tip of the wick here, from this swing low to this swing high, and you could have targeted just getting out right here, giving you like a 1 to 4.5. There's another way you could have done this as well. You could have took it from the whole bottom swing to this, bringing you back to a continuation trend, and you could have even still held and maintained this trade all the way up to here, clearly showing you a large indication of bullish volume, giving you another almost a 1 to 7 risk to reward. So there's two trades there. They all happen within the span of 20 minutes. So it's pretty significant. And then we actually had a little bit of sitting in our hands for about an hour and some change. The next opportunity was about at 8:49. We actually could have maintained these trades all the way up to near this purple line here. This is the overall move where I had a higher time frame prediction that price would come up, tap, respect this, and then retrace in a reversal. And price just shy missed this by maybe, how many pips is that? If I can see, looks like about seven pips. I mean, that's pretty close considering how volatile gold is. So now we're just going to show you what happened at 8:49. So we waited for price to reach this area. We saw there's a lot of exhaustion. There's a form of a double top here. And we're going to look for 8:49. 8:49. Our entry was right around that candle here. And the reason why is we actually saw a market structure shift. There's a market structure shift because price failed to make a higher high, broke this low, made a lower low, made a now lower high, and then we also are going to draw our trend line. We have this tip of the wick here. Price comes up, respects it, and in the time of this, we actually, I'm trying to draw the trend line. Let me move off this magnet. It was right along there. So price came down, market structure shift. The move had already been completed. We see a double top, maybe a form of a triple top. You want to use this as this exhaustion candle. And then we saw price thumbs up, respects it, makes a bearish candle, and then we enter at that 8:49 candle. So the 8:49 candle is right around here. We're risking 25 to 30 pips for a stop loss, and we're going to be targeting that overall take profit to that minus 61.8, and we're targeting all the way down here. So basically this was a pretty significant trade, risk to reward. And then while this trade was continuing to run, we noticed that price came back up and retested this zone right in here. So then we actually had another scale and entry to a continuous bias because we had not fully reached our overall target. And let's see here. We're going to enter price right at that. I think it was 859. We entered, yep, 859, the close of the candle. The 859 was the close of the candle, was right around here. We're risking 25 to 30 pips again. And we are targeting that minus 61 pointer, minus 27. And we ended up taking it from that swing high to this swing low. And we actually ended up targeting this minus 27. We actually ended up exiting the trade somewhere, in this 4,055 region. We saw price come down once, twice, three, four, five. It was taking too long for price to come down and tap this first take profit. So we saw signs, signals of reversal. We saw doji candles and exited the trade there. So there's the fourth trade. And again, this was because there's a market structure shift. We see this was a scale and entry. We see the trend line. We see the Fibonacci respected 61.8, which is the golden zone. We have bearish engulfing candle. We have price action. And we understand that the higher time frame completed move has been completed. So then we have this fifth and final opportunity. It was getting close to the end of the session. It was about at 10:25. We only had about 5 minutes left until, our trading rules of just getting off the charts. We don't want to overtrade. We don't want to be staring at the markets all day. We want to go out and do things and live our life, right? So we actually saw a buying opportunity at 10:25, which was right around here. So what had happened was we saw potential trend line break, counter trend line break, and then we had price respecting this trend line, 1 tap, 2 tap, 3 tap, 4 tap, dragging to the future, and price came down and respected this. There was a doji indecision, signs of reversal. We have this hammer bullish candle, and we entered, was it 10:25 or 10:24? I think it was actually, the close of the 10:24. So yeah, so it was this candle here, not the best entry. So we entered right around here, and again, sticking to our risk management, and we want to target that minus 61.8, and we barely just tap it, just roughly around like at 11:30 or so, 11:40, and took us out of the market for a 1 to 6 roughly risk to reward. So that's today's video. If you are liking these videos and they are helping you on your trading journey, and if you would like me to break down any other trades, any other pairs that you may seek interest, leave a comment, but most importantly, leave a like and subscribe.